Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. It's a Wednesday morning, and yesterday, of course, we conquered that 26,000 milestone for the first time. Although some selling pressure kicked in, and we ended the day extremely flat. This morning, the GIFT Nifty is hinting at a quiet start, but a negative start at that. Although global cues are looking positive, China, Hang Seng, all these markets are extending their gains after the stimulus measures that were announced by the Chinese central bank yesterday. Of course, lots of stocks in focus. You have the likes of Delta Corp, MCX, KC International, a lot of them to watch out for. And the big news, of course, two big ticket IPOs of Swiggy and Hyundai India, Hyundai Motors India have got the SEBI green light to launch their IPO. Of course, we will be getting you more details on those IPOs as well. But of course, all your stock related queries will also be in focus. So if you have any queries, keep them coming in on a live feed on YouTube. We'll try and take them up with our technical expert on the show. But before we move any further, let's quickly take a look at the top headlines at this hour. In fact, clocking yet another record close. Stocks shake off a weak consumer confidence report for the month of September. Asian markets trade mixed despite a strong handover from Wall Street. The GIFT Nifty is also suggesting a flat start for the Indian market. Gold rises to yet another record high above $2,650 an ounce, driven by geopolitical tensions and the rate cut by the US Fed. Crude prices, meanwhile, remain range-bound with the Brent around that $75 a barrel mark. And some big IPOs set to hit the Lal Street. Market regulator SEBI has cleared food delivery and quick commerce player Swiggy's confidential IPO filing. Auto major Hyundai could list by Diwali in India's biggest ever IPO, as sources tell Money Control that SEBI has cleared plans for a $3 billion listing. Well then, of course, let's take a look at the cues for trade. The GIFT Nifty hinting at a negative start. Also, the Nifty, in fact, took a U-turn after hitting that crucial 26,000 mark at the fag end of the session. The mid-cap index, meanwhile, saw a record close for a third straight session. Mind you, the Nifty has taken 38 sessions to climb from 25,000 to 26,000. And some of the key movers, in this 1,000 point up move were the likes of Bajaj Auto as well as Shriram Finance. But of course, the Nifty Metal Pack was the top gainer yesterday on the back of the stimulus measures that were announced by the Chinese central bank. And of course, that would mean that demand from the world's largest importer will see an uptick, which is why we saw an up move in the metal stocks. In fact, most of those stocks are shining bright, with the likes of Tata Steel, Hindalco, JSW Steel emerging as the top movers on the index. On the flip side, you had financials and FMCG. Those were lower, trending lower yesterday. But IT stocks, a notable move came in the second half of the session. They weren't doing all that well. And if you look at the IT stock or IT index performance for last week, we saw a cut of 3% coming in. And we were just about thinking that, the underperformance of banks has shifted to IT, and banks, on the other hand, have started outperforming or started performing now. But yesterday we saw a recovery kick in IT stocks in the second half. Good traction, names like TCS, HCL Tech, all of them clocking in gains after initial hiccup yesterday. In terms of option cues, the Nifty put call ratio dropped to 1.3 vis-a-vis 1.42 in the previous session. A couple of stocks that have entered the F&O ban are the likes of Hindustan Copper and IEX. That was the top Nifty 500 loser yesterday, IEX, now in the ban list. Still in F&O ban will be stocks like Aditya Birla Fashion, Granules India and Vodafone Idea. Quite a few stocks have come out of F&O bans, so expect a lot of action in these stocks. The likes of Aarti Industries, Biocon, Chambal Fertilizer, GNFC, LIC Housing Finance, Nalco, Oracle Finance, Punjab National Bank and SAIL. In terms of fund flows, foreign investor buying was missing yesterday, so they pulled out stocks, or they pulled out cash worth 2,784 crore rupees, and the domestic investors, however, were net buyers to the tune of 3,800 crore rupees in the cash market. But let's bring on board our technical expert for today, then Rajesh Palviya of Axis Securities. Rajesh, always a pleasure chatting with you. 26,000 has been cleared, but we of course didn't really manage to shut shop above that level. So, will this level 26,000 serve as a key hurdle on the upside for the index?
Good morning, Nandita. So I believe for some time, yes, maybe 26,000 may act as some supply zone as we are now heading towards the expiry and major call concentration area is placed at 26,000 level. But looking at the overall setup, we believe that, we may able to, break out about 26,000 level also. And if that happen, then, again, short covering action may trigger and then possible rally can extend to 26,200 kind of level also in very short period of time. So we are holding our bullish view till Nifty is intact about 25,900, 25,800. These are the important cluster on the put base. So I think till these levels are intact, one should remain on the long side of trade. Minor dip should be used as a buying opportunity. 26,950 call option we are keeping on our radar, and we are here initiating to buy with stop loss of 50 rupees and upside target we are projecting around 150 to 160. And I think the way Bank Nifty has also, moved up and almost trading and hovering near to 54,000 level. I think here also there is a possibility of, another rally towards 54,500 to 600 we can see in short period of time also, as most of the private bank as well as now the PSU bank also, started participating in this up move. So Bank Nifty is also looking bullish. 53,700 is the immediate support area. Till these levels are intact, I think one should remain on the buy side of trade for the Bank Nifty also.
And what do you make of the kind of move we saw in some of these IT names in the second half? Is there a trend reversal, or do you think that was just some bit of buying coming in at on dips?
So I think a lot of discussion was there for the IT stocks in last couple of months as the Fed has already cut the rate, and IT is going to get the benefit of all this action. And I think the way most of the IT stocks has corrected and now showing recovery in the previous day from their important support area, I think yes, IT can show good traction from here onward, and risk to reward is also in favor of trader. So for short-term trader also, it's looking very attractive even for short to medium-term investment perspective. Also, we believe that IT is a sector where we can see good opportunity. TCS is on our buy radar. Stock has corrected and taken the support from its important support area. I think TCS can extend its gain, so one can focus on TCS for upside target of 4350, 4400 with stop loss of 4230. Another stock, a mid cap IT that we like is Coforge. That stock is also one can keep on their radar. Stock is almost consolidating since last 4-5 trading session in very tight range, and there is a possibility of breakout above 7,050 level. Once that breakout happens, I think rally can extend to 7,300 to 7,400 for Coforge. So this stock also can be looked at to buy. HCL Tech is also looking promising. I think IT is the space where one can look to buy some of the stocks like HCL Tech, Coforge, LTTS, TCS, all these stocks are looking bullish.
Okay, that's the view on IT stocks. But just about 2 minutes to go for the markets to open. I want to get in your thoughts on an MCX. That will be a stock in focus given the fact that it has revised its transaction fees for futures and options contracts. The new fees will be 2 rupees 10 paise per lakh of turnover for futures, revised from 1.75 rupees earlier. And new fees will be 41.8 rupees per lakh of premium turnover for options, revised from 40 to 50 rupees earlier. Now, MCX has moved from a tiered fee system to fixed transaction fee structure as per the SEBI directives. We also have a note coming in from Morgan Stanley on MCX. They have an underperform rating, target price of 2,950 rupees, and they've said that the revision in transaction fees was of course to comply with SEBI's true to label norms, and the rise in transaction fees will result in somewhere around 5% increase in its FY26 EPS. Now, looking at MCX, in the last 1 month or so, we've seen a good 20% move coming in. Exchange stocks per se also have done well. Of course, we've also seen moves in BSE, good moves, in the run up to the NSE IPO. But particularly for MCX, how are things stacked up? Do you see a pop on share prices today?
I think overall structure for M6 is on the bullish side, and I think maybe just because of this news, some volatility would be there in stock prices. I think again in the decline, if you get opportunity around 5,700, 5,800 kind of zone, I think it's again good level for trader also to enter in this stock. And the way stock has moved up, we believe that this stock has potential to continue furthermore upside towards 6,300 to 6,400 also. So buy on dips is the strategy for MCX. And we believe that most of the platform companies like BSE, CDSL, all these stocks are clearly in the bullish trajectory, and we believe that this space can continue furthermore bullishness as the financial inclusion is happening and equity, the way the volumes have picked up and the new demat accounts are, opening month on month basis. So I think this platform company get the beneficial benefit of all this the equity market. So I think MCX, BSC, CDSL, all this can be kept it on their buying
Hmm.
radar, and buying dips is the strategy.
All right, that's the view. Buy on dips. That's the strategy for stocks like MCX, CDSL, and the likes. But of course, we are looking at a very flat open for the market, although a negative one, as was being suggested by the GIFT Nifty. 25,900. We seem to be holding on to this level as of now. We did, open around this level, and we did break below that level as well. But for now, it's a 30-point down take. Sensex as well, just about 70 odd points lower. The mid cap index is also moving in tandem with the benchmarks. Some bit of cool off after 3 days of consecutive record close for the mid cap index. Bank Nifty as well. We are witnessing a downtick. It is below that 54,000 mark as we speak. Talking about some of the other sectors, I think it's the metal pack that is holding on to the gains that we saw yesterday. Yesterday, metals was shining bright. That index was up 3% today as well. Holding on to gains, 0.5% uptick coming in on the Nifty Metal Index. Pharma is the other one that's managing to hold on to slim gains. But if you look at some of the other sectors, they are all trading with weakness. The likes of IT, which saw a good pop in the last half an hour or 1 hour of the session yesterday, down by 0.3%. You have FMCG pack extending its weakness. Financials also under pressure. Yesterday, we had the Nifty Financial Services Index weekly expiry. Today, it's a Nifty Bank weekly expiry as well. Auto pack, very flat, but trading with a negative bias. India VIX has jumped by 1% or so. 13.5 is where it's at. The realty pack also, witnessing some bit of pressure, 1% downtick coming in there. So, barring the metal and pharma pack, all of the sectoral indices are trading in the red. And of course, the bias this morning is on the negative side. Let's take a look at some of the movers on the index then. Power Grid, that's the top stock on the Nifty, 2% higher. Hindalco, Tata Steel extending their gains from yesterday. 1% gain coming in on both the counters. Adani Enterprises, Ultratech Cement, BPCL also in the green, although crude prices are above that $75 per barrel mark. L&T extending gains today. Yesterday, of course, there was a large order win for the company. HDFC Bank also, in the green, although the Nifty Bank index is in the red. HDFC Bank holding on to that 1760 mark as we speak. Just looking at the losers, Bajaj Auto cooling off a bit. The stock has been hitting fresh highs consistently. Today is the top Nifty loser. Britannia from the FMCG pack among the top losers, and some of the IT names like HCL Tech, LTI Mindtree, Infosys, all of them once again under pressure. But looking at the open, Rajesh, what would you be keeping on your radar in terms of trading picks?
I think Apollo Tyre can be looked at very strong opening for the stock, and the way stock has moved up in last 2 3 trading session. We believe that Apollo Tyre can be looked at for upside target of 550. Stop loss can be placed at around 530. I think another space that is looking attractive is automobile. Again, M&M is also looking very promising. The way stock is trading near to the series highest point, I think here we can see further more upside. Possible target for M&M we can see towards 3150, 3160. One can keep on buying side of trade. Stop loss can be placed at 3040. And another space that is metal. That space can be looked at, and from that space, I think Vedanta can be looked at. Here we believe that this momentum can extend to the level of 500 also. So Vedanta is buy with stop loss of 472. And another space is pharma, that is Biocon is looking promising. Stock
Hmm.
came out from the main period, and the way stock has moved up in last 2 3 trading session, we believe that Biocon can extend its gain. 395 to 400 is the next target for the stock. Keep stop loss around 370.
Okay, that's the view. Those are the picks recommended by Rajesh. But Rajesh, let's talk about some of the buzzers before we move on to stock related queries. Easytrip, that's one stock that's in focus today. Promoters were looking to sell some stake, and there has been a block deal in the counter as well. 2.6% equity worth 176 crore rupees have exchanged hands at an average price of 38 rupees per share. And promoter Nishant Pitti was likely to sell stake up to 8.5% via the block deals. An indicative price was supposed to be at 41.5 per share. But looking at the stock price, the stock of course is under immense pressure as we speak, and even if you look at the monthly and 6-month returns, they have been fairly, nothing really to talk about as such, because the stock has given negative returns to the tune of 13% or so on a 6-month basis. How is Easytrip Planner stacked up on the charts? Would you take any trade here? And what are the patterns looking like right now?
The pattern is looking weak only, and the stock now slipped below to its important critical support area of 39. So I think if it's and stock is trading below to all its near-term, short-term moving averages, the way stock has broken this support area, I think if it remains below to 39, furthermore supply pressure we can see in the stock prices, and possible stock may slide to 34 kind of level also. So I think one should avoid this stock at this juncture. The trend is still weak, series of lower top, lower bottom formation on daily and weekly chart. So I think from my side, it's avoid.
Okay, avoid is the call on Easytrip, but there has been a development with respect to Delta Corp as well, and the stock is reacting fairly positively, up 7% or thereabouts. Of course, there was the whole GST overhang on the stock, but the demerger news, comes as a good news here. So Delta Corp, how would you really look at this stock? More upside, and what is the level that you'll be watching out for as a resistance here?
So it's remain underperforming stocks for a long time, and some positive news and some recovery is taking place, but still the resistance is placed at around 146, 150 zone. That level needs to cross in this pullback. Until the stock not crosses above 150 zone, again some supply pressure or some profit taking can be attracted around those level. Above 150, there could be a rally towards 165 also, but at this juncture, I think 150 may act as a major supply zone. On the downside, if you have already bought stock at lower price, so your stop loss should be placed at around 136. That's the strict stop loss one needs to follow.
Okay, that's the view on Delta Corp. Then just talking about the jewelry stocks, then of course gold has hit fresh highs. It has been hitting fresh highs on the MCX as well. It has hit a fresh high. So stocks like PC Jewelers, TBZ, Titan, all of these stocks are in focus. But PC Jeweler in particular, the company will consider subdivision or stock split on the 30th of September. Today, of course, PC Jewelers has hit a fresh 52-week high as well, 157.3. That's the 52-week high on the stock. Could you or would you play this stock for levels of 200 rupees?
So most of the jewelry stocks have done well, and the way this sector is behaving since last couple of months, we believe that further more traction going forward we could see. PC jeweler, yes, it's clearly in uptrend. If you analyze the structure, its stock is moving in upsloping channel on the weekly chart. So we believe that yes, here we could see a target towards 170 to 175 in a short period of time. Keep your stop loss around 140. I think another stocks like Kalyan Jewellery is also looking bullish from that space, and the way stock is almost enjoying its all-time high trajectory. I think here also there is a potential for further more upside, and we could see target towards 850 to 860 for Kalyan Jewellers also. So one can keep these stock also on the buying radar, and your stop loss should be placed at around 735.
Okay, that's the view on the jewelry stocks. But then on that note, let's shift focus to some of the viewer queries that are trickling in on our feed this morning. Views on MCX. We've already discussed MCX. This is for Debu K. You can perhaps rewind the feed a bit and check out Rajesh's answer on this particular stock. But I can spot a query on Power Grid for the short term. Since this stock is the top Nifty gainer, might as well take it up. Nana Prakasam wants to know your thoughts on Power Grid. Although some of these PSU names have come off their highs, Power Grid has been doing well, consistently. In fact, it hit a fresh 52-week high as we speak. Short-term levels here, what should one watch out for?
Power Grid is looking very bullish, and the way stock managed to be breakout of its previous swing high after consolidation, I think the trajectory is clearly suggesting that now this stock gradually can move further higher to the level of 400 also. So it's a slow mover, low beta stock. So I think those who have patience to ride these kind of stocks, they can buy and accumulate this stock. But it may take time because it's a low beta stock. But looking at the long-term structure, we believe that buy on dip should be your strategy, and possible target positionally we can see towards 400 also.
Okay, that's the view. Possible target of 400 on Power Grid. Hope that answers your query. But let's take up the next query. I know it's a recent listing, but I just want to get in your thoughts on whatever you have seen or the kind of moves that you have seen on Bajaj Housing Finance. Recently listed, but it became a multi-bagger upon listing itself, right? We have queries trickling in on this stock. Raja Pasala wants to know if you have any view for the short term. Can one enter the stock now? Any thoughts with whatever data you have? Would you be able to make an opinion here?
So I have very limited data setup, but a very strong demand post IPO listing, and those who have already got the allotment, they are still in the good profit in this stock. I think 145 should be your stop loss if you want to hold the stock, as the demand is still there in the stock prices, though stock has retraced from its recent high. But I think 145 is the trajectory where major support action is visible on the chart. So till stock is holding above 145, I think trajectory may remain on the bullish side until the market is behaving in the bullish manner. I think there is a possibility that once the stock crosses above 165 kind of level, possible rally can extend to 175, 180 also, as whole real estate and housing finance companies are showing good buying interest in last couple of months. And I think the business is also looking quite interesting for the real estate space also. So I think housing finance companies can be looked at for longer term perspective. So those who have short term view, 145 should be your stop
Hmm.
loss. But for long term perspective, I think there is no second thought. They can hold on the position for long term. I think stock may reward you in a longer term basis with a good return going forward.
Okay, that's a view on a Bajaj Housing. But the next query is on a railway stock. IRCTC, Satvika Ranganathan has written in. She wants to know if she can hold on to an IRCTC for a 5-year time horizon. Of course, railway stocks are just about chugging along after the dream rally that we've seen in some of these names. But very long term, what would your view be? Should she remain invested and perhaps add or average it on dips?
So underperformance is there in most of the railway stocks in last couple of week. I think most of the stocks are behaving in the same manner. Corrective move is happening, but long-term trajectories are still intact for the railway stocks. IRCTC, if you analyze, stock is now trading near to its important support area of 870, 880 zone. So till the stock is holding above 880 zone, I think there is a possibility that some pullback action we can see in the stock. 950, 960 is the immediate supply zone on the higher side. If stock able to take out above 960, then really can extend to 1000 level also. But it may take time as underperformance is there. And I think in this up move of market, this space remained under pressure only. So sectorial rotation is happening, and most of the investors, those who were sitting in the profit, most of
Right.
the railway companies have some profit. So I think it
Hmm.
may take time. 880 should be your stop loss.
Okay, hope that answers your query, Satvika. The next one is coming in, since we're talking about railways, I just thought we'll also take up a query on defense. Chandrasekharan AR wants to know your thoughts on Bharat Dynamics. All of these defense names have come under pressure after of course a stellar up move. Some of them have even dropped 30 to 40% from their all-time highs, right? But there's a lot of action in the defense space. Defense Acquisition Council recently clearing projects to the tune of 1.4 lakh crore rupees, and all these domestic defense companies will be considered for them, and of course there is a lot of action there still happening, right, with the government's Make in India push, etc. So for the likes of a Bharat Dynamics, does it make sense to utilize this this blip or weakness, so to say?
So most of the defense companies again behaved in a similar manner as we have seen in the railway stocks. So these two spaces were moving, in tandem, and now both spaces are showing correction because most of the investors were sitting in huge profit, and really was stretched quite a bit. So some cool off action is taken place in most of the defense stock. BDL is another the same story. This is the third consecutive month where we are seeing a lower high-low formation that clearly shows that sustained supply pressure or sustained profit taking we can see in the stock prices. Looking at this behavior of the profit taking, we believe that on the downside, 1030, 1050 is the key support area for this corrective move. If stock able to hold out those levels, I think from those levels we could see some pullback action. And then in the pullback, 1230 is the immediate supply zone. If it crosses, then I think there is a possibility of 1500 kind of target also in BDL. So I think wait for those who wants to buy fresh, you can wait for 1050, 1060 kind of level where again one should review it, and if it's hold, I think there one can deploy some long trade in this stock.
Okay, that's a view then. I hope that answers your query. Last query, really, this one has just come in from Vic. Wants to know your thoughts on PFC and REC. Would you take a bet on any of these?
PFC REC long-term trend is bullish. Though some consolidation is happening in the stock, we have seen a recent rally up to the level of 550 kind of zone and some correction again taken place. But again, stock has now trading near to the important support area of 470, 460 zone. So I think if these levels are intact for the PFC, I think again it's a buying opportunity in the stock in this decline, and possible pullback we can see towards 500, 510, and if it's crosses 510, rally can extend to 550 also. So for trading point of view, again one can buy this decline with stop loss of 470 for PFC.
Okay, that's the view on REC PFC. But with that, we've come to the end of the query segment. So Rajesh, would like to thank you for taking out time and joining in, as usual, and helping our viewers as well navigate with their stock holdings. Look forward to interacting again.
Thank you.
Well, on that note, just about trading in the red but off opening lows, we are well above that 25,900 mark as we speak, and the Nifty Bank Index has just about managed to edge back into the green slightly. No big moves, but we have recouped some of those opening losses. But on that note, let me bring on board our next guest for today. Joining me is Anand Rathi, who's the founder of MIRA Money. Anand, great to have you on the show as always. We have crossed important milestones both in terms of Sensex and Nifty, and a lot of experts I speak to have concerns regarding valuation. So how should you really approach this market now? And are you getting any comfort in terms of earnings as we step into the second quarter earnings season?
Yeah, so I'll split this again. Thank you so much for having me. I'll split this question into three parts. First is, are we comfortable with investing at these levels? Definitely yes. We see the markets going up significantly higher from here. Of course, this is only if you are a long-term investor, if your holding period is 5+ years, and you have the ability to adjust to the fact that your portfolio could be down 5, 10, 15% or so from these levels, right? And also, if you believe that you will be adding more and more money over a period of time, I think these levels shouldn't really matter to you. Primarily because we don't see Nifty today at 26, 27. We see at about 50, 55,000 in the next 5, 6 year period. And what could be the big driver? I strongly believe the EPS growth, which stalled a little bit in the last couple of quarters or maybe a little longer, is the one that can be the big driver for the markets to continue to scale up from here. So
Right.
you hear me?
What should be the asset allocation strategy now? How much of an exposure should one have to equities? While this is a general thought that one must stay invested and not stay out of this rally. But what is the kind of proportion one should allocate to equities? And since we are also seeing, gold, clocking a very sparkling rally and hitting new highs every day, how much of allocation should one keep to gold?
Right. So, in our belief, we believe that if you're a long-term investor, you could go up to as high as 80 to 90% of your money being in equity and set aside about 10 to 15% in cash, just in case if there's a correction to the tune of about 5-10% or so. And even in the allocation that you should follow is you should keep most of your money in large cap is our belief, primarily because there's a lot of valuation comfort when it comes to large caps. We are not too very comfortable with mid cap valuations for sure, and small caps are looking basically okay, right? So that's the reason why we believe if you're investing in equity, large cap is the space to be. That hasn't run up really very high like mid and small cap. So we believe you go, out of the 80% of the money that you invest in equity, keep as high as 80-85% of your money in large caps. Gold is a very tactical asset. I'm not a big fan of gold, to be honest, because timing is very crucial. In India, gold has gone up primarily because USD has been appreciating against INR. Otherwise, gold is not a great asset. Having said that, in general, we keep about 5 to 7% of our money in gold at any given point in time and tactically increase it to 10-15% if there is an expected rally. At this moment, I am scaling down on my gold allocation from 10% to about 4% or about 5% at this point in time.
Okay, so you're halving your exposure to gold, so to say. But let's also talk about what's happening in the metal space. We saw China announce a slew of measures to kickstart or to revive the stress in the realty sector there. Metals have been rallying. Yesterday we saw 3% rally. Today also there's been a fairly good up move in an otherwise weakish setup. But in the past, whenever we've seen any kind of data coming out of China, all the up move or the euphoria, so to say, has been short-lived. This time around, do you think the measures that have been announced by the Chinese central bank are enough to revive the realty market there, because it has been under stress for the last 4 years? How do you really look at what is happening in the metal space? Do you think this space could outperform, or do you think these up moves or these rallies would be short-lived?
So the immediate answer to the question is yes, there will be a small up move and then it will stall because the attention will be given to the lot of details that China will release from now. China has been trying very hard to get to a number of about 5% GDP growth, and I think the latest measure that they have done in the form of cutting interest rates and things like that will have an impact on general economy and specifically real estate, because real estate has been sagging very badly in China since COVID. I strongly believe that this could trigger a bit of a rally in steel sector, primarily because if real estate in China does well, a lot of steel companies and non-ferrous or ferrous companies actually should start doing well. So if you're an investor for a medium term to long term and have a sectoral view, I don't see a reason why we should not have some bit of metal sector in our portfolio. This could be short-lived to start off with, but I think if the measures that are taken by China start showing results, you may see a sustained rally in this sector. So start small with a non-ferrous or ferrous segment, and then increase your allocation if you see some positive results from China.
Okay, that's a view on metals. But if somebody wants to invest 10 lakh rupees now, with a 5-year time horizon, where should he deploy his money really in the market, and what kind of return expectation should he have over the next 5 years?
Okay, that's a very interesting question, and I really like. I'm generally aggressive when it comes to investing, and I strongly believe, as I said, Nifty is today at about 26,000, but is well on its way to about 50,000 by 2030. So, if I have 10 lakh rupees, and if it is my risk profile, I would actually invest all the money in equity, and I would expect it to, if not more, at least to double from here. So, which is about 14 and a half, 15% kind of a return, even if you put your money in large cap indexes. And if you are able to add a bit of sector portfolios and a bit of themes like manufacturing or infrastructure, maybe your returns can go up by about 1% or two from 14-15%. So net, I believe if you invest correctly, your return expectation could be in the range of 14 to 16% from here on.
What is the best type of fund to look at the current juncture? There are so many thematic funds that have come in. And, in terms of, flexi cap, investing in large cap, mid cap, what should the mix be if you're looking at investing in mutual funds?
So what I would do today is invest 70% of my money in core funds, which is funds like investing into large caps, investing into mid caps, some bit into small cap. Those are called core funds. I would keep about 80-90% of my money in large caps and the remaining between mid and small cap. This is for the 70% of the portfolio. And if I'm also a little more aggressive, which I believe most of them could be, I can actually invest the remaining 30% in few sectoral calls. I did mention about metals today, but metals is not my initial sector. Today, if I were to invest, maybe I could actually invest in infrastructure. I would invest in IT because the valuations are attractive. I believe pharma is looking very attractive at these levels. So I would invest 30% of my money in these kind of sectors and themes, and maybe 70% of my money in large caps and some bit of mid and small caps. That's what I would actually do today.
All right. And lastly, any negative triggers that you would watch out for? Anything that could trigger some bit of a healthy correction in the market? Because most of the experts that I have spoken to have said that the undertone remains bullish and there is no reason for a structural downturn from here. So, if there is a correction, what would be what would qualify as a healthy correction now?
So the healthy correction today is going to be about 5 to 10%. I don't see major reason why we would correct beyond 5-10% from here. And if there is a correction, I think the one possible reason could be the state elections that are ongoing and that are upcoming in the next couple of quarters. I think one can keep an eye on those elections because that could mean a little bit of impact on central, and that's why I would keep a closer eye on them. But I'm not too really worried about 5-10% correction. I believe India is on a structurally long-term growth story, so I will keep investing in India at every fall and at every rise.
Okay, that's the view then on the market. With that, Anand, I would like to thank you for taking out time and joining in. Appreciate your sharing your thoughts with us. Look forward to interacting again sometime.
Thank you so much. You have a good day.
Thank you. Same to you. Well, on that note, let's take a look at what the markets are doing. We are off opening lows, and as we speak, the Sensex is in the green, and so is the Bank Nifty, although marginally so. The Nifty is just about trying to break into the green once again. Mid caps, although, are underperforming as of now, 0.3% kind of a loss coming in on the mid cap index. And looking at the gainers, the mix has changed a bit. M&M has raised to the top. That's the top Nifty gainer, 2.5% uptick. Hindalco, HDFC Bank is doing well, very close to that 1800 level as we speak. Tata Steel, Maruti Suzuki, Adani Enterprise and Eicher Motors are some of the other movers. On the flip side, what's not doing well is the IT pack, names like Tech Mahindra, LTI, Mindtree, HCL Tech continue to see some selling pressure after the bout of up moves that we saw yesterday in the last hour of trade. But with that, of course, we've come to the end of this edition of Opening Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and of course, come back and join in at 3:30 p.m. on Closing Bell. Have a good day.